Welcome to the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way for you to exit your highly appreciated business, real estate, cryptocurrency, all tax deferred, so you can create and preserve more wealth. Maybe start another business, all tax deferred. Maybe buy some real estate. Maybe diversify. Hey, I'm your host, Brett Swarts. In each episode, I'm joined by some of the best real estate, financial, wealth, and business minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. We're also streaming on expert CRE secrets as well, podcast and YouTube channel. I'm excited about our next guest. He is the founder and CEO of Voltage Digital Marketing. He has been launching, operating, and growing private label e-commerce businesses for the last 9 years. As of today, he and his clients have sold over $100 million in physical products, primarily through the Amazon FBA sales channel. He shares his blueprint for how to build an online business that can generate a passive six-figure income in just 12 months, while setting up the business for potentially millions in sales within 18 months. Please welcome to the show with me, Neil Twa. Neil, how you doing?
Good, Brett. Thanks for having me on, man. It's good to be here.
Absolutely. Excited to get to know you a little bit better here on the show. And for our listeners, getting to know you for the first time, would you give us a little bit more about your story and your current focus?
Yeah, I'll give you a few minutes on that stuff that might be of interest that's not maybe applicable to my mom or whatever. But I started in the e-com stuff when I dropped out of college in my third year. I went to school on a full-ride music scholarship, but then realized I didn't want to live in a van down by the river. I wanted to obviously increase my wealth, get my business going, and do all kinds of stuff. Because of the time frame that I was looking at, no one could literally teach me how to do international or e-commerce at that point. In the world, because it was just getting started. So I went out into the corporate world, pulled myself up by my bootstraps, got into management and into senior management, eventually got into Sprint PCS as it launched, which was really cool to watch the first mobile phone go to market. Then got picked up by IBM and spent almost 5 years at IBM, building companies within companies. Didn't work on POs less than $1 million. We worked in enterprise level, financial and big tech and customer service, mobile areas, as well as e-commerce. Set out on my own and just got into management consulting for a lot of high-end companies. Started building my own company up. Got involved in more online marketing around 2009. Found I had an aptitude for media buying, so I got very good at driving traffic to other people's businesses. Woke up one day and said, hey, you know what? I should be building my own products and businesses that way. So I got involved in the physical e-commerce space. Which led me to find out that you could actually sell products on Amazon.com. That's around 2010. And I was like, wow, this is an amazing opportunity. Nobody's really taking good advantage of this yet. Let me see what we can do. Fast forward 9 years later, we now have a software team, coaching and mentorship. We have a digital agency. We launch these businesses. We operate them for our clients. Some of it even 100% passive for them, as well as exiting and acquiring brands now. Through our portfolios brand, in which we literally build these companies for exit.
Fantastic. And we're talking about building your business with the exit in mind. And this is with Neil Twa. By the way, you can learn more about Neil Twa at Voltage, D as in David, M as in Mary.com. That's voltagedm.com. But Neil, before we go there, I want to help our listeners and myself get to know you a little bit better. I want you to go back and I want you to picture yourself in the high school days, maybe the university days. And it's the younger Neil, right? And I believe we've all been given certain gifts in this life. Some people call them superpowers. Some people call them strengths. I believe they're God-given gifts, and they've been given to us to be a blessing and help to others. So I'm curious, what are the one or two gifts that you believe you were given, and how does that help how you help and bless people today?
Well, I mean, in the end, one of the things I finally realized about building business and building opportunity, building wealth and networking was it's who you know that gets you in, and it's what you know that keeps you there. So as well as your networking can do, you obviously have to know what you're doing. I had learned through the School of Hard Knocks to learn how to kind of do networking. The fluidity of business for me is like a moving river, because through high school and college, I played music. As I mentioned, I went to school on a music scholarship. I love jazz and classical, specifically jazz as an improvisation. And I found that business gave me the most flexibility to create and adapt and change and move. What my business partner likes to joke now is I'm the guy that jumps off the cliff without a parachute. And he comes with me. And after 9 years, he now learns to build the parachute on the way down. which isn't his biggest comfort zone, but it is mine. Change and adaptability, reinventing myself through life, through different business models, for being in the oil and gas space and having patents for wireline technologies in the oil and gas space, to ending up in high tech, then ending up in back into e-commerce, which was my original love and the reason why I even dropped out of college. Being flexible, accepting change as a normal process of life. These have been things that I believe, been gifted with, to see the optimism and the possibilities of them, not be too, really deferred by the difficulties, but overcome those objectives with a positive mindset, with a positive attitude, and a realization that I can just keep shifting gears and changing directions and flowing with that river as it's changed, which has created a lot of opportunities for me.
I absolutely love it. I think of change, flexible, adaptability. I think of the honey badger a little bit, right? And you can just prep it all out.
Yeah. Yeah.
So I got a little bit of honey badger in me too. So that's really cool.
Nice.
Thanks for sharing that. So now let's dive into the number one secret to building your business with the exit in mind. So when you're coaching, consulting, even for yourself, what's the number one way to make sure you're keeping the exit in mind?
Well, I mean, at the end of the day, a profitable product builds a profitable brand and builds a profitable company, and obviously a good profit and loss statement. So it's really understanding the customer solution. The number one thing is really putting yourself in the mind of someone else, really stopping, as they say, to walk a mile in someone else's shoes, to really understand the solution that you're trying to provide for that product, that's going to build a brand of solutions for a specific kind of person, or what we refer to as an avatar, a profile of a person. If you can really put yourself into that person's needs and wants and desires, and really adapt what they're doing and understand what solutions and things they're trying to do through a product format, that's the way we solve those in a basis of products, then you can double. If you double your understanding of the customer, you will double your revenue. So we really spend a lot of time putting ourselves into the market focus, where we've gotten really good at reading what the market wants as opposed to telling the market what it wants. I think that comes from that bit of adaptability and flexibility in my past, to really look at that customer. So the number one secret to us is really defining that really good customer avatar. For us, it has to do with a bit of a solution-oriented nature. So let me give you an example what that means. Instead of, for example, looking at a customer base that says, hey, I'm willing to wait for an hour and pay $300 to have that abscess tooth taken care of from the dentist, we're looking for the customer base that says, hey, you know what? I want that out in 10 minutes. I'm willing to pay $500 for it. And that's the solution that I'm looking for. And if you provide that level of solution, certain aspects of the business model work out. And a lot of people focus on the ideas that if I don't sell the $300 solution, I'm not going to have a mass market appeal, which is actually kind of a stinking thinking, as I refer to it. The truth is there's just as many people buying the $500 solution as the $300 solution. So really the secret is understanding that customer avatar, really driving into solutions that they're looking to solve, what they're really trying to solve, not you necessarily, which is typically a profit-oriented focus, but a solution-driven business model with products that actually meet that solution.
Beautiful. I like that. Double your understanding of your client or customer and double your income. Understand your avatar, making sure you're providing a solution that they really want, not one that perhaps you think you need to provide. Is that a fair summary?
Fair summary, right? Because that leads to a multi-product brand structure, with each product being profitable that goes to market, right? A minimum profit requirement of that product to be accepted into the portfolio. It has to perform over a 90-day period under certain metrics and conditions that run into an annual run rate for that product. That's our way of looking at it from a bit of it. As long as we're fulfilling that customer need, we'll meet those requirements. All of that obviously rolls into a good 12, 18, 36 month run rate of growth, year to year growth, and of course the increase of that portfolio and brand that gives it a good exit potential.
Perfect. So that's step number one. What's step number two to building your business with the exit in mind?
Step number two is ensuring that you have good systems, processes, and an efficient game plan in place to repeat that model. It's not so much that I get up to the plate and, to borrow a baseball analogy, expect that I'm going to hit a home run every time that I get up to the plate. If you can bat a 200 average, you're going to be in the top 10%. So it's what I call the lottery mindset mentality. It's this idea that if I step up to the plate in business, I'm going to hit a home run, and anything shy of that is not going to be acceptable. So what we look at is diversification of the product line, even the brand line, to lower the risk and increase and kind of widen the yes on the brand with the customers. to ensure the stability of the business. And through that comes a process or a pipeline, which we have developed over years of doing these businesses and growing them and exiting them. So it's more of a predictable base. So again, the process and procedures and game plan are very important to building a standard operating procedure that can be repeatable, not just for us, but for our clients. It's one thing to say, I built a great store and I built another great store and I built another great business. It's something else to say, I have many clients who has exceeded their own expectations, even exceeded our expectations, following a simple methodology that we deployed that they can take and replicate to scale.
Got it. Okay. So systems, processes, procedures, building a consistent way to be able to diversify and apply that to perhaps different product lines, to diversify your income streams, and making that all just seem together. Is that a fair summary?
That's a fair summary.
Very cool. I like that. All right. By the way, you can learn more about Nia Twa at Voltage, D as in David, M as in Mary.com. That's voltagedm.com. So what's step number 3?
Step number 3 is really understanding what the market will accept for the product and brand. And so let's take a look at kind of what's an acceptable measure of business for an e-commerce companies. If you have a single channel of Amazon only, what's called fulfilled by Amazon or FBA, it's a way for us to automate the procedures, the process of the end mile to the customer for the products we choose without us having to have a lot of operations, overhead, or employees. That gives us the flexibility and freedom of building a model with a lot of upside of economies of scale, gives us operational independence in many ways. Those are all attractive qualities. The third thing is really to build that business that's attractive to the buyer. All right, it has to have a good upside potential, meaning that it has not been fully exposed to the market for the products and brands you're serving. Amazon, for example, is about 31% of the e-com sales market. The other 60, 70+% is out in the world of e-com. That could be major sites, it could be QVC, it could be other components of radio, television ads, etc. That brand has not made itself a household name for yet. So as we use the FBA channel and we look forward, if it's a single only channel and we're going to sell that, in the last 18 months, there's been almost $7 billion deployed in buying only that Amazon FBA channel. There's about 62 plus aggregators now that are purchasing these and adding them to portfolios and brands, what others are using as a wealth without Wall Street strategy. They're purchasing these companies inside the aggregators and allowing basically the aggregator to become the passive income opportunity for the investor. We work in a process kind of similar to that by teaching people to understand how to build with the buyer end in mind and the exit in mind, so that everything is staged up from the very bottom of the foundation of business building. So that business can be exited. That's down to even the chart of accounts, the bookkeeping, the processes, the automation and components of that, as well as the ability to make it passive for the person who's running this company prior to actually exiting. So we actually can exit the client from the business prior to actually taking it to market, making it very attractive for the buyer who's looking at this. Now it has to at least have a 7-figure revenue and have a minimum of 20% net profit on it. If that's the case in that business, it's a very good acquisition for many partners out there in the space.
Fantastic. Wow. So this is one thing I'm learning is that you need to get with coaches and consultants who know what they're doing when it comes to exiting and building your business. And Nia Twa, you're proving your expertise here. So you can learn more about him at voltagedm.com. That being said, let's shift a little bit now to when you exit. Part of our show is capital gains tax, right? I mean, oh my gosh, you build this thing up. You start from scratch. You have no basis. You're about to sell it for $10 million. And you're faced with 30 to 50% in capital gains tax and depreciation recapture, depending on what states you live in. So, Neil, what's the biggest frustration when it comes to capital gains tax deferral as it pertains to the sale of businesses?
Well, it really has to get down to the opportunity that is both a virtual and physical asset inventory business model. So we can price the business differently than we can price the inventory, because the inventory obviously has a depreciation or an asset depreciation behind it. Or it could be an appreciating asset depending upon how you structure the business. Now we have things like just seller discretionary earnings that can change that. There's cash versus accrual basis at the accounting level to determine how to properly procedurize that business by the time it goes to exit. And then if you're going to look at the deferment of that, we would even recommend you put it into a trust in the process of creating that. Now, you're more of an expert at this than I am, but there are different ways to structure this for exit or even a legacy play that can defer some of that cash or even defer some of the taxation of that at time of sale. So it's really going to be up to you to go. Again, I'm not a tax accountant attorney. I was sure that you have, Brett, the expertise to advise people on that. What we do is ensure that they understand, of course, the tax liabilities that are going to be incurred on that at time of sale, and then, of course, seek counsel and help to ensure to minimize those. One of the ways we actually do that, too, is to go and deploy another business structure in which that capitalization can be reused in another business structure, either in an owner equity capacity or loaning the company money to basically go back and launch a new company after the first one sells. So we actually have the opportunity to take that and then redistribute that capital to reduce that taxable by basically doing it again. Once you learn,
Neil,
how
I
to
feel
do
like
this
you're an
quality,
orchestra, right? And you got all these bands playing and different instruments, and your musical mind is like putting all of the melodies together, right? And you're putting the operations, you're putting the the books and records, you're putting the product, you're putting the marketing, you're even putting some of the tax stuff here, right? And you're weaving this together, and you're up there, and you have what are those? I don't know what you call them. I don't want to butcher it, right? But you're leading the orchestra. Do you ever feel like you're the head of an orchestra?
Yeah, I wish I played more instruments, so I could understand some of the frustrations of some of those particular areas. It's enough to be dangerous to know some of these and not know them all. I have experts in this way, and as I mentioned, my business partner for 9 years is very strong in this financial market. He ran a financial business prior to this, and I leverage his operations and experience heavily, as we're two sides of the same coin. I tend to focus on more of the strategic. As you said, I'm more of the orchestrator. He's more of the tactician, and together with him and my other partners, I feel really many times like I'm the dumbest guy in the room because I'm around a lot of really smart people.
Very cool. Well, I'm really impressed, Neil, and I'm liking everything you're saying. And yeah, the answer is yes. And sometimes I feel like we got a Roman legion, shields, and we have the little spear that sticks out, right? And we're all marching, and we all got to get together and side by side and with the client in the middle and bring our particular niche strength, right? And then we also need someone who's like an orchestra, who's like kind of like overseeing and running it all, right? Maybe sometimes jumping in there himself with the shield and putting the spear to the would it be taxes or marketing or income and expenses or getting everything prepared, a broker, lender. All of this, right? It's complex because the tax code is complex.
It takes time. Mm-hmm.
Yeah, it takes time. You have an expertise. So very cool. Thanks for sharing that. And by the way, we do have a solution for that. We do specialize in the deferred sales trust. That's our niche, little spear that we use. And we help people defer capital gains taxes on the sale of cryptocurrency, businesses, real estate, not using a 1031 exchange. You can learn more about that at capitalgainstaxsolutions.com. That being said, we are running out of time. Neil, are you ready for the lightning round?
Let's go. What do you got?
All right. Knowing what you know now, if you go back to your 25-year-old self, what's the one golden nugget make sure to tell yourself to do?
Invest more in Bitcoin.
That's a good one, right? That or Ethereum, right?
Yeah. Back when it was $600 and I could have bought into it.
Oh, so bad, right? Next question. Yep. What's the number one book you've recommended or gifted the most in the past year?
Feel the fear and do it anyways. Susan Jeff.
Cool. Question number 3. What are you most cool? What are you most curious about right now?
I am most curious about, oh gosh, that's a great question. I guess where business is really going to shift in the next 18 months, given all of the level of complexity in business. I know in the last 18 months, e-commerce took a huge leap, and it's shifting so fast due to the changing economics of our world. I'm very fascinated to see what the next 18 months is going to look like.
Awesome. This is kind of a personal question for a family member of mine. He's exploded a custom watch business, right? And he's mostly, I believe, done it through his just organic, Facebook, and his site hasn't, as much as I know, gone to anything that's exterior, except maybe some small JVs, but hasn't gone to like the Amazon or anything else. Have you worked in that space where it's specialized, selling between $400 and $600 watches? And what would be your feedback for someone who's considering selling in the next year or 2 or 3 for him?
Yes. I mean, we've sold in pretty much every niche. I'll tell you that there are at least 3 or 4 we don't go into, and that's not one of them. We don't go into electronics or clothing or others because they're highly saturated and competitive. Now, watches in a niche space is not necessarily going to be that way. Yes, there's some top brands, but there's definitely a lot of room to offer good quality and even good prices compared to some of the higher end type of products. In terms of growth and scale, it's again knowing that customer. If you know that and you meet them on the locations in which they buy from, whether it's Instagram or Facebook or even Amazon as a secondary. What I tell people who are not on Amazon right now, if they're doing marketing or advertising or paid traffic in any other area, you should know people are ending up on Amazon. Our highest media buying traffic shows about 18% of that traffic does end up on Amazon. If they don't find your product, they're buying someone else's, and you've already paid for them. So we call it found money. If you at least get that product on Amazon and people find it, they're going to validate that you're serious. If you remember, you're about my age, you go back in time, once upon a time, businesses were not considered serious unless they had a website. Website was the kind of validation that, hey, you're a legit business. Well, if you're an e-com today and you don't have an Amazon store and people go to find you and they looked at Facebook, TikTok, or some other type of ad, they're going to go, I wasn't sure this was really a legitimate company and I didn't find it on Amazon. So it must not really necessarily be a legitimate company. So for e-com stores in the space of being out in the world today, if they don't at least have a presence on Amazon, someone else is buying that product.
Very good wisdom. I'll make sure to share this with them. And thank you for sharing that. Second to last question: what's the number one quote or leadership quote or theme that you strive to live by?
Do unto others as you would have them do unto you. Very simple.
Beautiful. Love it. Last question. After all your success, helping so many people that you've helped and build businesses, buy businesses, sell businesses, focusing on helping people create and preserve more wealth, with all of those things, how do you stay focused in your values and how do you stay encouraged to charge forward to reach new heights?
Well, one of the ways I've structured my life in such a way to keep focus on things of priority is for the last 9 years, we've homeschooled our children. We take a very big interest in their lives and where they're going. We take an interest in who they are as people, and that has kept a basis of foundation that I think keeping focused on the family has been a very important factor in my business life, the treatment of others, the encompassing of my clients and other people around us who are very similar in lifestyle, structure, and nature, looking for other ways to build passive income, wealth without Wall Street, opportunities to grow businesses, teach their family, looking for alternatives in education, infinite banking concepts or real estate concepts and short-term rentals and other ways to focus assets and money don't require traditional methods is one of the things that we have become very focused on in the last decade, which I think is very important for people nowadays to consider all of those options for personal and professional reasons.
Amazing, Neil. I want to thank you for being on the show. I want to encourage you to keep using your gifts of being able to change, to be flexible, to be able to adapt and help others do the same to grow their businesses so they can exit very well. For our listeners who want to get in touch with you, would you remind them one last time what's the best place for them to find you?
VoltageDM.com. That's VoltageDM.com. Or if you're just search for my name, it's very short. You'll find one of my social media profiles and you're welcome to look me up there. Awesome.
Neil, thanks for being on the show. I'm also going to thank our listeners for listening to that episode of the Capital Gains Tax Solutions podcast. As always, we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way for you to exit your business, your real estate, your cryptocurrency, all tax deferred so you can create and preserve more wealth. If I can help you in any way, please reach out. Go to capitalgainstaxsolutions.com. By the way, we're also streaming on Expert CRE Secrets podcast and on the YouTube channel as well. And we're trying to help commercial real estate brokers, M&A advisors, business brokers help their clients create and preserve more wealth using the Deferred Sales Trust. You can check us out there. Thanks so much, everyone, for listening. Please rate, review, subscribe, and we'll talk.